said survey. So obviously we're seeing a lot more positive sentiment when it comes to cybersecurity. Again, on November 18, when our survey started, the iShares Cyber ETF, well, it wasn't outperforming, but now outperforming the market and the triple Qs. Again, that ETF still 22% off of its high. And these tech leaders, they're very cybersecurity focused. And we asked them what should be the top priority for the newly elected Congress. The top two answers, very much related: data privacy and security, as well as competition with China. More than a quarter also saying cybersecurity and reporting standards. That rounded out the top three answers. And that's the latest from our TEC survey. Andrew, back over to you.
Mr. Howland, thank you, sir. Appreciate it. Fascinating results. Meantime, when we come back, lawmakers taking aim at crypto in the wake of the FTX turmoil. We're going to speak to Mike Novogratz of Global Digital, or Galaxy Digital. You know, it could be global, but Galaxy is even bigger than global, I think.
Hello. Hi. I hope that everybody can hear me. I would like to know if people can hear me. Fantastic, Michael. Welcome all. Welcome to today's Applying the Pitchfork in Your Trading. We'll get started in a few moments. I'm gonna give a little bit of time for people who are, still looking for the email or whatnot. About 3 minutes. We'll start right around 8:03, 8:05. Okay, so hang tight, and hopefully we'll get this going soon. Okay, I'll be back. Hi, okay, so let's get going. Let's start the webinar. I'd like to welcome you all to today's webinar, applying the Pitchfork in your trading. Okay, I'm your host, Giovanni Betancourt. I have 20 years of experience in trading in the Chicago Mercantile Exchange, also in the options market, and educator, analyst, and self-taught a lot of different things. All right, so what are we gonna, but before that, let me just go over the disclaimer real quick. Vantage, the information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy of or reality of the information provided here. All righty, so let's get going. The agenda for today, we're going to be looking at price fluctuation. We're going to be looking at channels in that price fluctuation. We're going to be looking at median lines. We're going to be looking at finding frequency using the channel, looking for frequency using the Pitchfork. We're going to cover the 5 key principles of the Pitchfork. We're going to be looking at the different types of Pitchforks that are there, the shift, the modified, the insight, and then at the end, we'll have some Q&A. Alrighty then, so let's get started. All right, so today we're gonna be looking at the work of Dr. Alan Andrews, who was a Newtonian and a physics professor. The Pitchfork is based on the laws of physics, Newton's third law of motion. When two objects interact, they apply forces to each other of equal magnitude and opposite direction. In trading, we translate that into when there is more demand than supply, prices increase, and when there is more supply than demand, prices decrease. So that's like kind of the translation that we get from that third law of Newton law. Okay, and then he also talks about the potential energy, which in physics, potential energy is the energy held by an object because of its position relative to other objects, stresses within itself, its electric charge, or other factors. In trading, we call that, or we can translate that into an uptrend, top, downtrend. Now, the stress within itself, obviously, that's the volatility in the market, and the electric charge is the euphoria that we feel when we have a winning trade, and the madness that we feel when we have a losing trade. That's my point of view of looking at it, but obviously we could probably see it in different ways. Now, since markets don't ever move in a straight line, they flow much like an ocean, and with this, there is a 5-wave pattern that drives the market up or down. Okay, and I like to touch this because I think it makes our webinar easier. So there are 5 waves, okay, and they're motive and corrective waves, and they are, which are number 1, 2, 3, 4, and 5, and then they are followed by the corrective sequence that moves the market against that primary trend. Okay, and we label that as A, B, and C, just for argument's sake. But these waves are fractal in nature, meaning that they are also part of a bigger wave. So once we understand that, markets do move like a wave, like an ocean wave, and obviously we do have those swings, then we are getting into the context of what trading is and what the Pitchfork will be used for. And I like to talk about, the wave principle, as I believe it will help us get our mind in the right set. And the wave principle is generated by man's social nature, mass psychology, which is keyed to a naturally occurring mathematical progression. expressed by the Fibonacci sequence, and more specifically, the golden ratio, which says, we have the 0.618 and its inverse 1.618, and we find this golden ratio all throughout nature, in our own bodies. You look at your own ear, look at the pantheon. So there's a lot of this golden ratio involved. So what Mr. Allen, he was trying to do, he was placing all of these things all into one forecasting tool. So the Fibonacci tool is a pretty good forecasting tool, but it's not really a forecasting tool. Okay, it's detailed a description of how markets behave. The primary value of the wave principle is that it provides a context for market analysis, and this context provides both a basis for disciplined thinking and a perspective on the market's general position and outlook. And at times, its accuracy in identifying and even anticipating changes in direction is almost unbelievable. Now, the path of prices is not a product of news. Its movement reflects a repetition of forms that is independent both of presumed casual events and of periodicity. Now, let's get into the context of the webinar and talk about the Pitchfork as a tool that draws channels. And when we use channel lines in our trading, they can start to be applied, after the second wave is used. But now, using the wave principle, let's go back into some principles. So we have the first wave, the first impulse move. All right, we can measure that amplitude. Then we have the corrective wave. Okay, and so when we think that that second wave has completed, that's when we can actually also be able to draw our own channels. Now, using some of this simple way of drawing channels, you can do a lot of things. So as a guide to the potential extent of wave 3, when you want to draw a channel, you want to be able to draw, and when you want to be able to see how far the third wave will go, you want to be able to connect the bottoms. So connect the initial part of wave 1 to the end of wave 2, all right, and extend it on. So now we draw a parallel line to the top of where wave 1 and where wave 2 begins, and so we call that, and that we have that already our channel. That's a very simple way to look and draw a channel. Now, these two lines act as a handy visual guide or channel, illustrating the likely boundaries for normal wave 3 as it develops. We can draw a line from the end of wave 2 that parallels the line forming wave 1, okay? And we mark the point on the top parallel line where this potential wave 3 and will intersect the top guideline. So we also want to mark the point of intersection if wave 3 amplitude was equal to 100 of wave 1. Okay, depending on the character of waves 1 and 2, of course. So these two intersecting points may well not be in the same place. Okay, again, this is only a guide to suggest a range of wave 3 and can be used as a complement to the Fibonacci sections that follow. All right, so this right here, and if you want to take a screenshot of it and practice it, by all means, that's what it's here for. Practice on the demo, please. All right, so this will be one way to look at channels, all right, to see what we can do. Now, we're going to be going to do what we're going to be going now doing is we're going to look at a simple price swing channels. And then after that, we're going to use the median lines to look at the same price swing. And you'll see the difference between the two when it's used correctly. The median lines are a much quicker set of lines that can capture the trend 2 or 3 pivots before you could draw a correct channel, for example, or before your indicator at the bottom of your chart turns. So let's get started with this one. It's really simple, okay? This is going to be really simple. So here we go. Here's our first price swing. There's our bottom. Here's our top price. Price comes up, and here we run out of energy, price turns lower, we take out this prior bottom, okay, and we now have run out of energy. We now have the three potential pivot points, the bottom and that top, and again, that bottom. Let's see what will happen. Price takes out this top, so now we made a top for this move. And if you think about this simple wiggling lines, if you look at a chart though, you will see that there are expanding pivots because it took out this bottom and now it's taking out this previous top. So, going back and retrace some of these accomplishments, okay, on another pivot. So it goes back, it retraces some of these accomplishments and it runs out of energy to the downside, okay? Then it sprints higher and you might expect it because when it turned lower, it didn't have much luck to the downside. It made a little bit of traction into this prior swing, but then it turned higher. And this higher swing expends a lot of energy. So you will expect that it will run out of energy. It's not going to the moon. Price turns lower, okay, where it ends across the prior top. So if you see that, the prior top, okay, it ends right there, right? So now, price makes another attempt, makes another move to the upside, okay? And you could see where price returns, makes a turn, turns lower, and makes a prior swing to the low. Now, these two tops, as far as that have is made right here and here, as far as I'm concerned, is what we call a double top, right? That's basically a double top as we see it. So there were lots of sellers, up here, and we will call them whale traders that trade large amounts that were willing to sell up in here. Perhaps the trend was getting a little old. Maybe there was prior structure over in this area to the left. Something made them want to sell over here. And there was large hedge, for example. So now we're gonna take a look using channels, okay? So we're gonna be looking for frequency using a channel to find the probable path of price. So when I talk about probable path of price, we have to understand that we are speculators. So we wanna be able to use words that fall within our exercise. So now, taking a look at this, we're gonna be doing the same. We see that price sprints, runs out of energy, turns back lower, makes a slight new bottom, runs out of energy to the downside. Now, let's talk about this point here. We finally have something that we can draw our channel, okay? We have our 3 points, our pivots, 1, 2, and 3. So we connect the bottom points, just like we did on the previous exercise, and then we project that to the top, okay? Now we have a channel. And if you never seen or a channel drawn one, it looks very simple, like this. This is what it does. And it will give this, it's given this downward slope line, okay? And as we copy this and make this prediction, we can see that if you were a channel trader, this channel projects its pressure not towards the downside, and where it should run out of energy to the upside. So now let's add another swing to our channel and see what it forms. So price breaks above the prior top and runs through the top of the channel, busts our channel line after one pivot, and that really doesn't work very well, right? So perhaps it needs another pivot to define the probable path of price. So now we see price develops on here. So let's do it again. Okay, we see price make a move higher, sprints higher, runs our energy, runs lower, finds a bottom, price moves higher again, takes out the prior top. Okay, and now we have a move to the downside. So now in this scenario, what we can do is that we can connect these two tops with a line, okay? And we're gonna copy this upward slope line and connect the bottom, okay? Now let's make this little dotted line and place it eyeballing somewhere in the middle of this channel. Okay, because we want to find that, where can the price move towards? All right, where can we find perhaps some support, and obviously we find that resistance. So check it out. Sure, price pulls back, runs out of energy right in the middle. All right, so this could probably work. Okay, so now next price action comes in, and oh boy, that didn't work. Price broke above the top of the channel, and this isn't working well for me. So what can I do? All right, so one thing that I can do is, let me try, and I can measure, okay, the distance from this previous low, okay, to this previous top, okay, and then we can project that to the upside. All right, so I came in, I measured from this previous low to this previous top, and that distance I projected it to the upside from the top of this previous top. And so now we have an extension of our channel. Okay, now let's take a look at what could happen. We've projected that, and we see that price retraced and it stopped in the middle of nowhere. So there's like, okay, I don't know what's happening. This is really not really working well for me. So perhaps I'll just step away from the screen, relax my mind, drink some tea. And now what I'm gonna do, I'm gonna be using the medium line to see what it does for me. Okay, so we're gonna be using now, looking for frequency using the Pitchfork. All right, so here again, we have our price swing. We make a top, runs out of energy, pulls back. All right, makes a lower bottom. We now have our 3 pivots for a channel or a median line. Okay, but let's wait to see if price turns higher to show me some buyers. Okay, so we have some buyers. Now we see these 3 pivot points, which is 1, 2, and 3. And these 3 pivot points, we're gonna name them. All right, so we're gonna name the first one A, the second one B, and the third C. Okay, so now we have A, B, and C. So let's use this top and this bottom, and then what I'm going to do is I'm going to find the middle. Okay, so we're gonna use this top, and what I'm gonna do, I'm gonna find the middle of the swing from B to C. Okay, by using a fancy word, I'm gonna bisect the middle from B to C. All right, so I'm gonna eyeball it. So that's the middle of that. Okay, from B to C. So, and I'm gonna be marking that middle. So you could actually do this. All right, and then I'm going to connect it by drawing a line from A to the center and project it out into space. And look, this is, now you have a median line. This is all where it is, a median. This is your median line. All right, now I'm going to copy this slope, and I'm going to add a line with the same slope to the top of B, all right, to my pivot point of B. So okay, just like the other channel. Now I'm going to also copy the same one and connect it to the bottom of C. Now look, now you have the Pitchfork. This is what the Pitchfork is. Okay, so it works. It looks nice. It looks something that you're gonna be able to use, and you could actually do this, just like this, drawing it. So let's use some price swings and see what will happen. Okay, so let's see what that will look like. Price moves. Okay, before I move on, I'd like to say something is that some people call it pitchforks. Some other people may not even know what it means, but the medium line in the pitchfork is what makes it a pitchfork. It gives us the probable path of price. In other words, we're looking to see if price will fluctuate within this median line, and we see price takes out the previous stop with this swing, And how we haven't met the upper parallel, okay? We haven't met that yet over here, okay? So we haven't made up, and so you might ask if this median line is useful. And here's the first problem some people run into. And now, if they are channel traders, they get all nervous and they start changing their A pivot or pick a different B and leave the same C. But they're trying to fit it to match price. And here's the important thing to understand: ABC. If you do the work, the amazing work, things happen in medium lines. 80% of the time from any A to B to C, once price heads higher, if it's an up sloping median line, it will make the median line or its next most likely line 80% of the time. Some say that the bottom end of this statistical figure is a 72 probability price will meet the next medium line. So let's take a look at what happens next, okay? So price turns back lower, okay? Runs out of energy. Now, do yourself a favor, do yourself a favor and kind of lean back away from the screen and take a look at this little rascal. Do you see anything similar? Well, I think I'll some water. Do you see anything similar on that swing? All right, as above, so below. Now, this was translated out of the original language by Sir Isaac Newton, okay? And in fact, he built his principles of physics off of this book, The Emerald Tablet, okay? As above, so below, all right? And this can be translated into for every action, there's an equal and opposite reaction. So take a look at this swing. It's centering around the median line or middle, and you can see close enough about the same distance was traveled by price to the upside as much as to the downside. You see that? Do you see that? Does anybody see that? Okay, so as above, so below. So now we're getting plenty of frequency here. So let's see what price gives us now, okay? Price fluctuates above and below the median lines and is parallel. It breaks to the upside, takes out the stop and it heads higher. We penetrated above this upper parallel. And if we pay attention, okay, it may be useful to us. We need to let market talk to us. We need to understand language of price. It runs out of energy, okay? So take a look. Price comes down, okay? Breaks through the median line, okay? So take a look. So as below, as above, as below. So if you are able to identify these points, this frequency, this will help you decide where to put your orders once you have decided that you have a medium line that works for you. So let's take a look. Price resumes its move to the upside, retest a prior top, a little higher at least. It tested the upper parallel. It almost touched it, okay? A lot of times it will touch it exactly. This is a couple of pips, ticks shy, no big deal. So then we have price pulls back, runs out of energy, heads lower. It overshoots our lower parallel medium line. But take a look at the overshots, okay? Take a look at the overshots. As above, so below. So you should expect that this median line is going to be precise within about this much of the upside and downside. So you don't need to run and draw new median line. So you can relax, listen to price. Let it tell you where it's going. Let it tell you the probable path of price. Even when price violates a median line, and it is as it did here, it will give us clues about where price is likely headed, okay? Remember, another word to remember about price, price is king, okay? Price action. That's basically what I'm trying to tell you. So, we're gonna be talking after this, we're gonna be talking about the 5 major principles of the Pitchfork. But before that, I wanna take a few seconds and see if you are following me. Do you see the good use of this simple drawing lines in front of you? I know it's not a chart, but it's actually taken out of a price fluctuation of a 240-minute oil chart. So this price fluctuation actually was drawn on top of that chart. And you could actually do that. And I encourage you to do that because that's what you can practice. Okay. So let's move forward then. So we have the Pitchfork. Okay. The Pitchfork is a trend channel tool and consisting of 3 lines. A medium trend line in the center with 2 parallel equidistant trend lines on either side. And these lines are drawn by selecting 3 points, usually based on reaction tops or bottoms, moving from left to right on the chart as with normal trend lines and channels. The outside trend lines, this can obviously be able to project support and resistance. Now, the 5 major principles of the Pitchfork, he said that Dr. Andrews said that prices will reach the latest medium line. Prices will either reverse on meeting the medium line or gap through it. When prices pass through the medium line, they will pull back to it. When prices reverse before reaching the medium line, leaving a space or gap, they will move more in the opposite direction than when prices were rising toward the medium line. And prices reverse at any medium extension of a prior medium line. Okay, so those are the 5 key major principles of the Pitchfork. So you want to be able to understand these principles, and then you want to be able to apply those principles when using the medium line, when using the Pitchfork. Okay, so let's take a look at what that looks using a chart and using the tool itself. Okay, so this is another crucial chart. It's actually I used this not too long ago, and you can see here this is my A, my B, and my C, and the medium line. Okay, so from this point forward, we want to be able to project where the price has gone. Okay, so if we say that we have our points and we call them point 1, which is how you're going to be able to look and how are you going to apply the Pitchfork. Okay, because Mr. Allen states that the Pitchfork can tell you where prices is going 80% of the time if certain conditions regarding price actions are met. Okay, so there's also the Pitchfork adapts to the frequency shifting nature of price action. In other words, it's able to create updated projections about the future of price based on raw price action and without leveling effects of mathematical indicators like moving averages. So Mr. Andrews, he claims that the Pitchfork is the only true leading indicator since it's a tool with 0 lag. So precisely for that reason, it adapts to the non-linearity of price action without attempting to make any sort of smoothing. So the interesting thing is that it's able to maintain a certain degree of simplicity while moving to the noise from price action in a unique way. So the first step to using Andrews Pitchfork is selecting 3 points for drawing the trend lines. And these points are usually based on reaction tops and reaction bottoms. In this case, I use a reaction bottom. And if you look at where I put my first point, and if you know about Japanese candlesticks, that will be most likely what? Does anybody know? This candle, point 1. Does anybody know what this candle looks like in Japanese candlesticks? Go ahead, Simone. Type in the question, the answer, please. Well, an inverted hammer, right? So from here, this is my reaction low. From here, my first point, my reaction top, because that was the movement of it. Okay, it retraced most of this previous movement, and then it went another reaction low. So my third point, and from here, I projected it. I projected the shift. The pitchfork. So having identifying those points, the first point of selected marks the start of the middle line, okay, the median line. Okay, points 2 and 3 define the width of the pitchfork channel. The median line is based on 2 points, point 1 and the midpoint between points 2 and 3. As such, the median line starts at point 1 and bisects points 2 and 3. And this controls the slope, steepness of the median line. And the outside lines are then extended parallel to the median line. Okay, again, the pitchfork trend lines can provide support or resistance in an uptrend. The lower trend line acts as a support to define the overall trend. The upper trend line acts as a resistance, and the median line defines the strength of the trend. So prices should reach the median line on a regular basis during an uptrend, and failure to reach this line shows underlying weakness that could foreshadow a trend reversal. So the steepness of the pitchfork channel depends on the placement of the 3 drawing points, and particularly point 1, which is the start of the median line. And even though point 1 usually starts with a reaction top or bottom, it is sometimes necessary to adjust point 1 to ensure a realistic price channel. Now, unfortunately, there are no hard rules for point placement. Instead, chartists must use judgment and experience when drawing channels. This is where the subjective nature of technical analysis comes into play. As with most aspects of technical analysis, it is important to build experience by experimenting with Mr. Andrews' pitchfork and see what it does or doesn't work firsthand. Now, it's the only real way to master any indicator. So let's take a look at the different types of pitchforks. Okay, there are about 5 types of pitchforks, and three of those types are more like actuary tools. Now, the pitchfork is able to display the underlying angle of a market based on the relationship alternating market vectors, and this can be used as one of the most powerful trend identification methods available. So he also claims that pitchfork is the gateway to a technique called frequency shifting. One of the most advanced in all technical analysis, like frequency shifting, are able to pinpoint the absolute minor and major reversal points. And without the foundation of the pitchfork, first, it will be impossible to develop such a technique. All right, so in front of you, this is actually the shift pitchfork. And this is a variation from Dr. Andrews' pitchfork. It was actually the guy's name is Jerome Shift, who actually was a student of Dr. Alan Andrews, which invented the shift pitchfork. Now give me his last name. So it became clear that a new tool was needed when the 3 pivot necessary to draw a more traditional pitchfork could not be found. And so the set of choice of 3 pivots was replaced with a substitute. 2 pivot points and the midpoint of a preceding swing. And the purpose of this innovable pitchfork structure remains the same. Now, to find the optimal description of the market bottom, the shift pitchfork was originally named the shift median line and was sometimes called the modified or the 50% median line. So we have settled for calling it the shift pitchfork, which is how you will find it on the platform. Okay, and the construction of the pitchfork is performed in 3 different ways. So first, we look for the logical direction of the market. Okay, bottom context, not only the direction of the trend, but also the slope. Okay, also the slope. In the event that the trend is at its beginning, and we want to find the bottom, it's future development with a pitchfork, So we have to wait until the first correction. And this technique can be applied to either an up or a downtrend. The second would be on the new trend, we try to find a swing whose top and bottom can be used as the point 1 and point 2 pivots. And we mark the midpoint of the pivot point 1 and pivot point 2 swing preferably by using the charting program's Fibonacci tool, right? So you'll be able to use that. And then third, we try to construct the anchor of this pitchfork at the midpoint of the last swing of the just terminated trend. So all of these things, the tool does it for you. But you want to be able to see those things. In a minute, we'll see the difference in how this will be. Okay. Now, this is the modified shift pitchfork, as opposed to the standard pitchfork, the original or modified pitchfork handle. This is moved halfway to the vertical and horizontal distance between the top and bottom points. Okay, and then we have the inside pitchfork, and the inside pitchfork is basically a drawing tool used to in technical classes, which is derived from the standard pitchfork, and these are the different ways. So now that being said, let me stop sharing real quick so I could bring up a chart so we can see how these guys work. Okay. And we are going to be using, all right, so let me go back over here. Let me share my screen again. And okay, do you guys see my screen, the chart? Can anybody tell me? Can anybody answer if you yes, okay, thank you, Simon. All right, cool. So in front of us, we have a 4-hour, 240 chart of the WTI, okay? And basically, this is actually 140 minutes. So let's use the pitchfork. So we find the pitchfork, right? In this scenario, okay, we want to be able to use a movement. We understand we're an uptrend. So I'm gonna use the bottom as this movement as my initial point. All right, and then I'm gonna use this top. It could also be this top because it's a double top, but I'll use the first one, and I'll use this move swing low. Okay, let me just make this bigger so we can see the projection of this. All right, so looking at this chart, okay, we're seeing the trajectory of where the market is going, right? Is moving. I believe it's moving higher. So if we were going to understand that the medium line has crossed really all of this movement to the upside, and that's why I chose this thing is, there you go. Why are you moving? Let me do it again. It moved because I moved the chart. So boom, and boom. Okay. Come on. So I'm gonna use it again. This point, and this. Why do you move? Don't move. God, why are you moving? Sorry about this. I don't know why this thing is moving. It shouldn't move. It shouldn't move. It's making me look ridiculous. It shouldn't move. Don't move. Why are you moving? Why are you moving? Why are you moving? Anyway, shoots. Wait, I gotta make this right because this is not supposed to be happening. It's supposed to stay still. All right, there you go. Then I just, man, why are you moving? Hold on, let me see if I could just Give me some moment here. I'm gonna change it to day. Okay. Let's use this direction. Okay, there it goes. All right. Okay, now I'm using a daily. For some reason, on the 240 it was just not being friendly with me. All right. So on a daily chart, we use this, this movement to the downside as our initial point, then the extent of that movement, all right, reaction top, and this bottom. So from here, we can obviously say, okay, so yeah, it's simple. You're drawing the medium line right across, right in the middle of this uptrend, right? So therefore, we're gonna be saying, okay, so the top are gonna be our resistance and the bottom are gonna be our support. And right now, market is just really trading with inside of this entire channel, if you will. So this is the pitchfork, the simple one. Now, if you want to change and use the other ones, you right click and you look on the shift. And you see how that medium line moved. So this is why this person, Jerome Shift, said, okay, I want my channels to fit my price action. Okay, so in this way, we can probably we see that, okay, now this whole candle is within my medium line and this in the first support line. So you could probably come and say, okay, so if we're gonna be seeing a price fluctuation, it should stay within these ranges. Okay, and this is the shift. So now let's look at the modified. The modified pointed higher, almost kind of like the pitchfork itself. But you see the medium line where how it actually changed. And then if we do the inside, so basically what you want to be able to do is just play with this. Let's see if we can find a different movement so we can see this entire deal. All right, so in this 30 minutes, it'll probably be, no, it's let's see, an hour. Okay, let's do it with hour. We're gonna use this movement high, low, and this one. Okay, so we could probably use that. All right, and this is the normal one, the shift. So doing this, just by using this tool, we can see how market actually really does. You see, we want to be showing the trajectory of price from this, this reaction point, this low, because we have a node of volume right here. Okay, consolidation stage, a breakout. So now we understand that price is moving. So if price is going to continue to move to the upside, then we want to see price come, trade above our medium line, and meet our resistances, and then come back down to the medium line. So this is one way to use it, and that's the shift that they modify. So this is how you're gonna be able to fit price into it. Let's see if we can use it on the euro, on the euro USD. Okay, so it's 1 hour. Price is really flat in this asset. Let's take a look at indices. All right, so we understand the price is moving lower. Okay, let's do the trajectory. We're gonna use our top. Okay, we're gonna use this bottom and the stop. Now price is just really outside of it. But if we use our shift, we can see if we can be able to use it to show the probable path of price. So if we're saying that price will most likely come down towards the medium line, and then if we do find, let's say, a support towards it, it'll come back to the medium line. So we have here our line, and here's the middle of it. Here's the probable trajectory of path of price. It'll be cool. So yeah, thank you. No, it was, I don't know why it was moving, but I did it both ways. So this is one way for you to use it. Okay, the modified just really doesn't really help you much. The inside, it really makes price outside. So what you want to do, you want to play with it. You want to play with the chart, with the tool. Let's take a look at another asset. Let's take a look at gold. All right, gold in this time frame is not giving me any direction. Let's use a 4-hour. All right, so we know gold is dropping, and one way that we know that the gold is dropping is basically because, hold on, let me move this out of the way. Okay, let's look at. Do you see the dollar index chart? This is a dollar index chart. So if dollar index is moving higher, gold is going to move lower. That's the correlation between them. Okay, so in this chart, we want to use the tool. Okay, let's use this previous reaction point lower. Okay, let's use this one. Now let's use this one and this one right here, this low. So price is outside of my pitchfork. If I use a shift, okay, it helps me, but it's not really capturing all of the movement. The modified, no, not that much. The inside, all right, the inside perhaps gives me a better trajectory of probable price path. So if we're moving towards that, when we went down, or even a downtrend, then we have our support lines to show us where price will probably stop. And you see in this particular case, so as above, so as below. All right. Let me ask, how about give the floor? Did I make any questions to anybody? Does anybody have any questions? No questions? Okay. Well, that's about it for the time that I have for the webinar. So if there's no questions, then I'm gonna end the webinar. Thank you for participating. Okay. And hopefully you understood some of this scenario and see how you can apply the Pitchfork. It does take time, and in one webinar is really not going to really go for you to see the whole use of it and its productivity. But if you practice it, practice it, you'll see how this tool will really will help you. Thank you, Carlos. Thank you. Thank you all for participating, for joining me. I wish all of you a Merry Christmas and a happy 2023. I will see you next year. Okay, bye for now. Thank you for joining me.